The Madras Stock Exchange was born in 1937, during British rule, a time when Madras was a bustling colonial port and an emerging hub of commerce. It became the third stock exchange in India, after Bombay in 1875 and Ahmedabad in 1894. But it didn't start with tall buildings or digital screens. Brokers and traders would meet in informal gatherings, often under trees near the High Court on Second Line Beach, to buy and sell shares. Over time, this informal system gave way to a more organized exchange. Initially, MSE catered mostly to local businesses, textile mills, plantation companies, small industries, many of which were unknown in the north but vital to the south. By the 1960s and 70s, the MSE had grown significantly. It provided a trusted platform for over 120 listed companies, and trading activities were growing. It also became a vital space for SMEs, small and medium enterprises, especially in southern states like Tamil Nadu, Karnataka, Andhra Pradesh, and Kerala. Unlike Bombay, where large industrial houses ruled, MSE supported regional businesses, paper mills in Erode, sugar mills in Tamil Nadu, spinning mills in Coimbatore. As technology evolved, the exchange adapted. By the late 1990s, MSE had its own computerized trading platform called MSETS, Madras Stock Exchange Automated Trading System. What made MSE special wasn't just its age, it was its mission. It brought regional voices into the national financial system. MSE promoted financial literacy, encouraged local entrepreneurship, and provided easy access to capital for businesses that couldn't list on larger exchanges. For decades, it held its own against larger peers. But shadows were growing on the horizon. In the 1990s, the National Stock Exchange, NSE, was launched, bringing with it powerful infrastructure, electronic trading, and nationwide reach. For smaller exchanges like MSE, it was a turning point and a warning sign. Then came new regulations from SEBI, the Securities and Exchange Board of India. In 2012, SEBI ruled that stock exchanges must have a minimum net worth of 100 Indian rupees crore, an annual trading turnover of 1,000 Indian rupees crore. The aim was to make markets more secure, but for regional exchanges, it was a steep demand. MSE's trading volume had fallen drastically, many companies had delisted or moved to NSE and BSE. Liquidity dried up. Investors lost interest. Despite several extensions from SEBI, MSE could not meet the criteria. There were attempts to merge with other regional exchanges, to raise funds, even to reinvent as a specialized SME exchange, but nothing worked. And so, on May 30, 2015, the Madras Stock Exchange was officially shut down. After nearly 78 years, India's third oldest stock exchange closed its doors. The Madras Stock Exchange may be gone, but its impact remains. Many brokers who started there now work with NSE or BSE. Companies that once listed on MSE laid the foundation for regional industrial growth. And for decades, MSE championed financial inclusion in southern India before it became a national agenda. It's a reminder that financial history isn't just about numbers, it's about people, regions, and revolutions that often go unnoticed. The story of the Madras Stock Exchange is a forgotten chapter of India's financial evolution. A chapter that tells us how markets grow, and why they must adapt. What we lost was more than a stock exchange. We lost a piece of heritage. Loudspeaker, if you enjoyed this story, don't forget to like, subscribe, and comment below with your thoughts. More untold stories from Indian finance are coming your way.